Are Gen Z being locked out of the property market? Are they destined for a life of housing insecurity if they don't have generational wealth? And even if they do have generational wealth, will it be enough? Welcome to Real Talk, realestate.com.au's property news podcast. We are talking today about our beloved Gen Z. So these people are born between 1997 and 2012, and now they're currently aged anywhere between 12 and 27. We'll be talking about everything from being locked out of capital cities, generational wealth, multi-generational living, and loads more. Because if this generation want to buy a house, they're going to have to get creative about doing it. Now, we spoke to a couple of people to get their take on whether Gen Z are in for a rough ride.
Yes, I definitely think Gen Z are getting left behind in the race for property. I don't know how, on just a normal salary, you can compete with the pricing that's coming out in the market.
I don't think so. I think if they're willing to learn, then they will catch up.
I think they're struggling to find rental properties, and I think they're definitely struggling to save a deposit to buy.
Joining me at our Ready24 event today is senior economist from PropTrack, Eleanor Creagh, and Anthony Waldron, CEO of Mortgage Choice, to break things down. Eleanor, home ownership has been on the decline with each generation. Australia's overall home ownership rate is projected to decline to around 63% for all households by 2040. And we are seeing the lowest levels of home ownership for people aged between 30 and 34, with less than 50% owning their own property. Can you just explain how we got here?
Yeah, certainly. So, census data show that nationally the rate of home ownership has been lower for each successive birth cohort since the 1947-51 birth cohort. And I think quite importantly, research shows that as those younger groups age, they're less and less likely to be able to catch up and buy a home. So a household earning the median income in Australia right now can afford around 13% of all homes sold across the country. Lower income earners can barely afford any. So these dynamics present not only an intergenerational story, but also an intra-generational story, with younger generations being deprived, but also that poorest cohort of Australians being less and less likely to be able to access home ownership at all. So really polarizing income cohorts across and in between generations. There's a number of factors as to how we got here. So we know that increasing house prices and reduced affordability are certainly associated with delayed home ownership trends. Now, the underlying factors of how we got there are multifaceted, but center around rapid increases in population growth relative to the supply of housing, constraints on the supply of new housing, the decades-long decline in interest rates, which has seen a very sharp rise in house prices relative to incomes, and now more recently, or in the current period, the surge in mortgage interest rates that we've seen, which has all culminated in buyers at the moment facing the worst affordability in at least 3 decades. Now, there's other factors like changing household and family dynamics, which have also, those demographic trends, which have also played into declining home ownership.
Anthony, as the CEO of Mortgage Choice, what is your view on Gen Z's prospects of owning a home? Because that's dire.
It does sound dire, doesn't it, when you look at it in that sort of basis. But look, I remain optimistic, to be honest. And one of the reasons for that is, first up, there's going to be a few things happen. So these rises in interest rates that we've seen over the last little while, whether either at a stable or in the not too distant future, likely to be see some reduction in that. I think there's also just that growth in the bank of mum and dad and the way that has actually worked for intergenerational wealth, because there is going to be massive intergenerational wealth transfer that occurs across Australia. Most of that wealth is held in property. So as that starts to occur, some of that will open up opportunities, and it already is. The Bank of Mum and Dad's actually the second biggest lender to first home buyers in Australia right now, and so that's going to continue in some way, shape, or form. And look, there's a lot of first home buyer grants. It's actually something that we're going to continue to see, that there'll be this political pressure for people to get into their first homes.
So the conversations that you're having with brokers who work for Mortgage Choice, do you have any indication of how Gen Z is feeling?
There's obviously a nervousness around it. There's a feeling that they're going to miss out in that, and how do they actually get into the market? What are some of the tools that they can use? How do they think it through? Probably a couple of things as well. First up, if they're talking to a broker, they're actually in a better position already because they're seeking some advice around it. It's probably a bit of a skewed sample, actually, when you look at it in terms of those who are talking to a broker. A lot of them want to understand the different first home buyer grants, tax concessions, etc., that are there across the different states, remembering they're different in all the different states that are there. And a lot of them are actually starting to also talk to their parents and their families around actually, how do I start to get into this? This intergenerational piece, this piece about that youngest generation coming through, getting into a first home, has been an issue for many, many years. It's got worse. There's no doubt it's got worse. But it's a conversation which Australia's been having for many years.
How many Gen Z buyers are your brokers dealing with at the moment? Do you have any indication?
It's hard to know exact numbers, but we certainly are seeing an increase in first home buyer that's there. So, just last month, it was around about 15% of all of our inquiries coming from first home buyers and people asking for loan approvals. We're already starting to see that rise. So that's an increase over where we were this time last year. And even in this month, I know we're only halfway through it, but even in this month, we've seen an increase again, just up to 16%. So, look, that is an indication that there is still some confidence out there. There is also this rental crisis, as it's been described, going on. And, people feeling like they're spending so much on rent.
Yep.
What can I do? Is there some way that I could actually get into a house in my own right? And really trying to examine that. And that's kind of where the value advice really kicks in as well. People truly understanding their cash flow, how you can use that cash flow, everything that goes around that. It's pretty important.
Do you know where people are buying, regional or city, or we don't really have an indication of that?
I mean, obviously, it's harder to get into the city.
Yes.
It's harder to get in, and people are making compromises. So instead of the freestanding house, it's townhouse, it's apartment. Those aspects, if they're looking in a city. COVID obviously led to an expansion out into rural, semi-rural, beach areas, and all of those aspects of it. And, we're certainly seeing continued people continuing to look there. So some of the freedom which has been given to people, being able to work more remotely, does mean that search is broadening as well.
Are people buying solo with partners in conjunction with family members? Do we have an indication of that?
Yes. It's actually it's all of the above. Yeah, it's a real mixture of things that you actually see going on there. There is much more help from parents, much more help from other members of family that's going on. You're seeing members of families come together to purchase property as well. And whilst that was probably done a little less formally over the years, some of that's becoming more formal as well. So certainly seeing a lot of that come through.
All right. Well, I spoke to a couple of agents earlier today about Gen Z buyers coming into the market, what they're looking for and what they think about them. So let's listen to what they had to say.
I would think units,
Yep.
lower price properties.
Like if you look at now, it's probably easier now than what it would be in 5 years' time.
I think first homes, like townhouses and a bit smaller units and stuff. I think if we get ourselves in there, we can catch up to everyone else.
I want to drill down on some of the things Eleanor mentioned at the top of the episode, kind of about how we got into this situation. I feel like one of the biggest issues facing the property market at the moment, which is subsequently facing Gen Z, is the supply of new housing. Like we simply just don't build enough. Eleanor, what are the numbers looking like? How many houses do we currently deliver on? But really, how many new houses should we be delivering on?
Yeah, look, it's a great question, and certainly all roads point to a housing shortage at the moment. Renters are facing incredibly low availability of rentals, and buyers are facing the worst affordability in at least 3 decades. Now, if we look at the supply of housing, we know that in recent years, materials costs have surged. The construction industry is hampered by labour shortages, material shortages, and the like. And those factors have really combined to present a slowdown in the completion of new builds, which has hampered the supply of new housing. So currently, we're building around 170,000 homes a year. Now, that is below the decade average. But if we look at the level that we'd need to be building to sustain population growth alone, we'd want to be building closer to 250,000 homes a year. And if we look at, say, the federal government's target of 1.2 million homes by 2029, we'd want to be busy building around 240,000 homes per year. So really, the current 170,000 does not stack up.
We've never delivered on that type of numbers before. In that those homes within a 5-year period, we've just never delivered on that type of a number of homes before. But what does population increase look like year on year in this country?
So certainly we're in the midst of a population surge at the moment. That's no secret. In the past year, Australia's population grew by more than 600,000 people. Now that's gains attributed to net migration and natural increase. So that's a 2.4% per annum increase in the population. Now, if we look at the prior decade average, that's closer to 1.6%. So certainly, even if we do see population growth tapering off over the next year, we're still facing into this, housing shortage, whereby we're really not building enough to sustain the level required just by population growth alone.
Well, that doesn't sound like very great news to me because it just means demand is going to go up and subsequently prices are likely to go up as well. This brings me to what you spoke about, Anthony, before, the Bank of Mum and Dad. Because according to Finder, the Bank of Mum and Dad is estimated to be collectively worth $35 billion in Australia. Over 50% of kids who borrow money from their parents are under financial stress, compared to 28% of property buyers who do rely on their own resources. Look, these are huge numbers. And if I'm completely honest, I would have had zero chance of buying if I didn't have help. And a lot of people are in the same boat. Anthony, the Bank of Mum and Dad is becoming more and more prevalent in younger cohorts, people's property journey. Do you know whether they're, say, going guarantor?
Yeah, there's a bit of all of it going on. The guarantor market's certainly rising, and you're seeing certain lenders really play into that space as well. And so you are seeing both sides of that. There's also an aspect where it is a cash injection gift. It's kind of where you get the inheritance now aspect of it as well. And so you're certainly seeing that, and I think you'll continue to see that as we go through further and further. Also, I think you'll start to see as the older generations are downsizing, it gives them the ability to do that.
Yeah, you free up some of that capital in your house, right?
Yes, yeah. You're still in the property market almost because you're putting your kids into property at the same time. So certainly that is a big part of it, and I don't see that that's going to change.
Do you think it's going to become more so?
Yeah, it already is. And those numbers you talked about there, we're seeing that every day. People coming in and talking to their brokers, talking to their banks about the need to have their parents involved, have other family members involved in that transaction.
Do you have an indication of whether that's happening in the millennial market as well? Because, the anecdotal conversations that I'm having is that someone might be in their first home, but they've had a child, they've had 2 children, their space requirements change, but the financial situation hasn't necessarily changed. So they're finding it really difficult to upsize. So parents are then dipping in to help them do that. Are you seeing that as well?
Absolutely. Yeah. In some cases, it's probably bigger in that market just because of the age of the parents as well. And so you just got to look at where these parents are at in terms of their timing and the money that they've got as well. And so certainly sort of that older the parent is, probably the more likely they are to that to occur.
What do you think this does for Gen Z and millennials, I guess, that don't have this option? Because I feel like it will not only put those people behind other generations, but it's going to put them behind their peers.
It does make a difference, and it does makes it harder for those who don't have that capability. But it's not the end, right?
It's not the end.
It's not the end. There's still other ways for them to get into the market. You got to remember your first house is not your final house. People still have that capability. You have to think differently about what the first property is at times. You've got to be prepared to say, you know what, it's not a house, it's an apartment. You've got to be prepared to be further out from the city or in the regional areas that you're looking at. And that's a reality for some. The other reality is that right through time, there's been people who haven't been able to afford to get into property. And that's another part of where we've actually got to look here. There has to be that growth in supply. That has to be a huge part of this whole process, because that takes pressure off prices and gives us just more stock that's there. But it also gives the ability for people to buy investment properties. It gives a greater surge in rental properties which we can handle, which we absolutely need in Australia as well.
I think it also highlights the necessity for really well-targeted policy that aims at helping those who don't have familial support, who would otherwise never be able to buy a home, access to home ownership.
Yeah, I totally agree with that.
I think that's a great point, yeah. Eleanor, but if we go back to long-term price growth and decades-long decline in interest rates, what that's done to capital cities is kind of virtually made them unaffordable. Do you think for Gen Z in the market, they'll need to look further afield, like what Anthony was saying is just kind of to reality, get a little bit more creative about the market?
I mean, certainly, look, for some people, that probably will be the case, that, buying a first home in Sydney might not be accessible. We know that the deposit hurdle is a significant hurdle towards home ownership, and with house prices expected to continue to increase, that accessibility will continue to decline, and the generational gap will likely widen. So we know that at the moment, the time it takes for new buyers to save a deposit, particularly in Sydney, which is the most expensive capital city market, is a long time, and it remains incredibly challenging. So a median income 25 to 34-year-old household saving 20% of their income to buy a relatively affordable home, which is a home in the bottom 25% of homes sold in Sydney, it would take them more than 6 years to save that deposit. So certainly, I mean, people are going to have to get more creative.
Do you have an indication of what the median prices are doing around the country for the capital cities?
Yeah, certainly. So at the moment, the median value of dwellings in Sydney is sitting at a little over $1 million. We've then got Canberra, where homes are sitting at around $820,000. That's followed by Brisbane and Melbourne, who are now on par, where median dwelling values are around $800,000. We've got Adelaide. Median values are around $700,000. And then we've got Western Australia, which is the most affordable state. So the capital city market there, Perth, homes around $650,000 at the moment.
Anthony, what about you? I guess, does it make you think that the great Australian dream is over, or is it just that the dream is shifting?
That's a really good question. I don't think it's over. And you're certainly seeing that. I mean, even we were talking about before, first home buyers are increasing in terms of as a percentage of overall at the moment. So I don't think it's over. There's a few things that are happening there. In some cases, it's delayed. In some cases, it is about getting advice earlier. And one of the best things that anyone can do is actually get advice earlier. So you talk about it taking 6 years once you start to save. But if you start to save earlier, it happens quicker. If you start to think about it earlier, it happens quicker. So that's part of it as well, because quite often it's not, people don't actually make the decision they want to purchase for a period of time, and so they've actually wasted a period of time of saving.
Yeah, it's not something you think about, hey, I'm going to buy a house in a month.
No, you don't. No, but it's also something you don't think about when you first start work.
True.
And so quite often, there's that delay in even starting. So our people have to get their heads around that as well. So it's actually a financial literacy issue. And actually people starting and thinking about that right through from that we have to face into the fact that other countries are actually better than us as well. So there's a lot we can learn from people overseas around that. I think the other aspect in terms of it is really understand all of the potential offerings that are out there in your states, understand the first home buyer grants, understand all of the tax considerations. That is really, really important, because you want to make the most of those and you want to be able to make sure that you maximise your opportunity to get into a house as soon as you can. So really understanding that. And then first is not last. Be really clear that get into the first property you want to get into, because it's not going to be a forever house.
Eleanor, we've looked at a bit of the state of play facing Gen Z, but now I want to look at what could be facing them in the future. And I know it is hard to forecast that, and I definitely know it's hard to forecast what affordability is going to look like in 10 years' time. But when the average age of the first home buyer in Australia is 36 years old, what does that do for the wider economy? Because something I can think of straight off the bat is that if you're 36 years old and you get a 30-year mortgage, that means for the next 30 years you are going to need a full-time stable income to pay for that house, unless you fall into some sort of wealth transfer, or you never know, people's situations could change. But my point is that is going to drag up the working age. So what do you think is going to face this generation kind of in the 10 to 20 years from now? In your crystal ball.
Dust off that crystal ball. Look, I mean, certainly it's not hard to imagine a larger proportion of today's or future first home buyers carrying mortgage debt into retirement, given that loan sizes are larger and first time buyer age has increased. We do have this changing face of home ownership and shifting trends, and it's possible many don't achieve ownership at all in future generations. And if younger generations can't catch up, then it's possible we then see falls in living standards and increases in poverty into retirement as we face those retired renters who haven't had the opportunity to accumulate wealth through home ownership. And what does that mean for the policy landscape in the future, I think, is the critical question there. Certainly, I mean, forecasting where housing trends are going over the short term is hard enough. So looking out over the next 10, 20 years is, again, a whole different kettle of fish. But I mean, all else equal, it does look like this downward trend in home ownership is likely to continue, and certainly further home price growth we know will continue to pose affordability challenges for current generations and those generations to come unless there is substantial or meaningful change.
What do you think kind of needs to change, I guess, to allow them more access to the property market?
Good policy would be great. Targeted policy that actually enables people to transact, policy that enables people to, if they are a first home buyer, particularly if they don't have that supportive family and so on around them, really those are the people that we should be supporting into housing, making sure that it is there and it is affordable that's there. But there also has to be good policy that increases the supply of housing as well. We've talked a lot about that, from an REA perspective, and we've just got to keep driving for that. Supply is one of the only long-term solutions.
Do you have any words of wisdom for Gen Z looking to get into the market now?
First thing I'd say is don't give up. That'd be a myth. You can do it. Second thing I'd say is get advice. Like, go and speak to someone, have those discussions, understand that. Make sure that the financials are explained really well to you, some of the issues that are there for people. And, there's nothing, if you don't start, you'll never get there. So that would be the other thing, start early. That might be 5%, 3%, whatever it is that you're starting to save. But when you do make that decision that you want to buy, it will reduce the time.
We have covered quite a number of topics today from a very broad lens, I will say, but we've, I think, dived relatively deep into a pretty complex issue. So thanks, guys, for coming on.
Thank you for having me.
Yeah, thanks for having us.
Thanks for joining me. This has been Real Talk. For your weekly fix, please follow wherever you listen to your podcasts and tune in next time for more real questions, news and insights on the topics that matter most from realestate.com.au, Australia's #1 address in property. All information provided is general advice and opinion based on current market conditions. These opinions should not be treated as investment advice. Always obtain advice based on your individual circumstances.
Real Talk acknowledges the traditional custodians of country throughout Australia and their connections to land, sea, air and community. We pay our respects to elders past and present.